This is Matthew Cratter from Trader University, and today I want to talk about whether Bitcoin is about to hit escape velocity. I believe that it's headed much higher in the coming 12 months, and I want to show you why I think that. If you're interested in Bitcoin, momentum stocks, or just want to see what I'm trading or investing in, be sure to hit that subscribe button. So I get this idea of escape velocity. I think I first got it from Preston Pish, who's a great follow on Twitter. But escape velocity basically means it's the minimum speed needed for something to escape the gravitational pull of another body. So a rocket, for example, has to go fast enough to escape the Earth's gravitational pull. And if it goes fast enough and at a certain speed or certain velocity, it can actually go places like the moon or Mars. So escape velocity, the way I'm using it, will refer to the stock to flow model, which was developed by Plan B. He's got an excellent quant model that has been explaining a lot of how Bitcoin's been behaving. I'll link to this. I'll link to some of his papers. I'll also link to this podcast that he did with Stephan Livera, where he comes up with some unbelievable targets for Bitcoin. Now, right now, as I'm recording this, Bitcoin's trading at approximately $9,600 US per Bitcoin. But according to this model, which I think is quite credible, Bitcoin will hit $100,000 sometime in 2021, maybe by the summer, about 12 months from now, certainly by the end of the year, $400,000 by 2024, and $3 million per Bitcoin by 2028, assuming the model holds up. Now, what do I mean by escape velocity? Well, what happens with Bitcoin is, well, we can see this red line here. This, not the wiggly line, but the straight red line is the stock to flow model. That model's where Bitcoin should be trading at any point in time. We can see that that's where he's, in this chart, he's calculating the 365-day average of that stock to flow number. And you can see that Bitcoin sometimes trades above the red line, sometimes trades below the red line. If you believe in this model, if you, as I do, and if you think it's going to continue working, a good time to buy Bitcoin is especially when it's trading below the line. You can see that a lot of people are worried that we're going to have something similar happen to what happened in 2017. This was the peak at the end of 2017. And you can see here that the Bitcoin's price, which is the wiggly line, the wiggly colored line, got well above the stock to flow model. Now, the stock to flow model acts like a gravitational body. It exerts gravitational pull on the price of Bitcoin, which is why Preston uses this metaphor of escape velocity and why I'm using it now. So you can trade well below the model, you can trade above it, but it has a mean reverting quality to it, at least so far. And so what really happened in 2017, you can attribute this to the mania of crowds, you can attribute it to Bitcoin futures being introduced, etc. But Bitcoin mean reverted not just back to the line, but it crashed well below it. It has a tendency, like many financial markets, to overshoot. But if you look at this, you can see that, and this happened before. This happened in 2011. This happened in 2013 as well. So what I believe is going to happen, and it could actually happen this cycle, there are very strong reasons for this, is that Bitcoin will begin to price in these future halvings, these future prices. And as we saw, these are very high prices. This is $400,000, $3 million. And so what could happen is you actually begin to price in this higher level fairly quickly. Now, there are actual financial reasons for this. I don't think this is just wishful thinking. This is how financial markets work. They try to discount the future, which means price in what's already going to happen, price in things that have not yet occurred. So I'll give you an example. If investors, they do channel checks, they measure online traffic, they do polls, and if investors begin to think that Apple has been having a really good quarter, what they will do is they will start to bid up the stock's price. A stock's price will go up well before the earnings as it begins to price in those future good earnings. And so you can have a weird situation where stocks run up a lot, done very well going into earnings, they report great earnings, and the stock falls or stays the same. This can be because it can have something to do with forward guidance, but it also can be just a measurement of how much is already priced in. So if Apple's good earnings get priced in before earnings, the stock doesn't go up that much when earnings actually happen, if at all. So what I'm suggesting is that if Plan B's model works this time around, and we just had the 2020 halving back in May, and so that decreases the daily supply of Bitcoin and ushers in this new era of six-digit Bitcoin prices. And so if people, if traders, if investors, if quants, if institutional investors begin to think that Plan B's model really works, and this is the first really out of sample test we've had for a halving. He did all this back testing. I believe he released his model in early 2019, and since then it's been trading out of sample, what we would call in back testing or quant speak. It's basically trading in real time using real data, and we're going to see whether it models reality. So if we get to 100,000 in this cycle in the next 12 months, what will happen is there's a very good chance that institutional traders will begin to front run the 2024 halvings. These halvings, where the miner subsidy or the miner's reward gets cut in half, they are built into Bitcoin's code. So we know that this is something that's going to happen by definition because it's coded into the Bitcoin software. And so there's no question about, it's not like trying to project Apple's earnings 8 years in the future where there are many, many variables. In this case, we know what the relative scarcity of Bitcoin will be in 2024 and 2028. And so what could happen this time around is we begin to price that in immediately. Now, it doesn't mean we go to 1 million right away, but it could mean we go to 500,000 or higher. And let me show you how this works in terms of probabilities. This is a fairly simplistic example, but this is how you should think about outcomes. Now, it's very difficult to attach probabilities to future events, but let's just say that we think there's a 20% chance that Plan B is correct in his model, and that we think there's a 20% chance that Bitcoin will actually hit 400,000 sometime in 2024. And let's say we think that there's an 80% chance that it goes to zero. Now, I don't think it's going to go to zero. Obviously, it's a risky investment. It's a risky asset, and none of this should be investment advice, though you should know that I have a large position in Bitcoin. So 20% chance that Bitcoin goes to 400,000, 80% chance that it goes to zero. If you basically add up these probabilities, this is how you calculate the expected value of something where it should be trading. 20% times $400,000 plus 80% times zero, you still end up with a price, a sort of probability weighted price of $80,000 for Bitcoin. Now, if you think there's only a 10% chance that Bitcoin will hit 400,000, then maybe this drops to 40,000. But either way, we know Bitcoin right now is at 9,600, and so it's quite unpriced. It's quite underpriced, undervalued, according to this model. So what could happen is these sort of probabilities could begin to be priced in, and even if you think there's only a 10% chance that it goes to 3 million, that already gives you a 10% chance of it going to 3 million and a 90% chance of it going to zero. That still gives you an expected value of $300,000. And if that is true, if those probabilities are correct, we should not be trading at 9,600. So this is how Bitcoin can reach escape velocity, where it actually escapes the gravitational pull of the stock to flow model. Markets always trade differently once an actual explanatory model is out. And it looks like this chart doesn't go to the 3 million level yet. But what you could have is just an enormous move in Bitcoin where it begins to price in this future, these future prices. And in the process, it reaches escape velocity. It escapes the gravitational pull of the stock to flow model. Now, we have a very favorable backdrop for this. We have the Fed printing a lot of money, increasing the money supply, and adding assets to their balance sheet, keeping interest rates really, really low. Here's the M2 money stock. You can see how much the money supply has spiked just in the first two quarters of 2020. In addition, we have a lot of on-ramps being formed for Bitcoin to make it easier for the average person to buy Bitcoin. I've seen this movie before. This happened back when I was first starting to trade in 1996. My first brokerage account was with Daytech, and there were a lot of people who got introduced to internet stocks and did very well as these channels, as these discount brokers opened up. So we're seeing something very similar. Rumors now that PayPal and Venmo are going to roll out crypto buying and selling. Probably a lot of altcoins do well as well, but I'm only interested in Bitcoin. Now, we do know that the CEO, Dan Schulman, the CEO of PayPal, personally owns Bitcoin, and he says he only owns Bitcoin. I'll attach this. This is a great list, actually, of really smart people, really respected people who own Bitcoin. Then we have sort of the Robin Hood army, the Stool Presidente, Dave Portnoy, all of his day trading followers. And they've been playing around with penny stocks like Hertz, some of the cruise lines, and but they are quite an army, and Portnoy is has become very influential. And so if these guys start trading crypto, especially Bitcoin, you can see just an amazing rush in. And really what we'll begin to see is what we began to saw with internet stocks in the late 90s, fear of missing out, Bitcoin FOMO, especially if Bitcoin starts trading above 10,000 or above all-time new highs. And so we have this combination of money printing, central bank money printing. We have the stock to flow model in the public domain. Everyone's watching it. And we have all these new on-ramps forming. PayPal, Venmo, Robinhood. You can buy Bitcoin now, though it's not as, I don't recommend it simply because you can't withdraw it. I like using Coinbase and then withdrawing it onto a hardware wallet like Trezor. But it doesn't mean that other people won't use these. If you already have a Robinhood account, if you're following Dave Portnoy and all of a sudden he's buying Bitcoin, you can be sure there will be a ton of money flowing into Bitcoin from these penny stock traders, from these small retail traders, not to mention the huge institutional flows that we are beginning to see. Paul Tudor Jones disclosing about a month ago that he owns Bitcoin futures. And we're seeing more and more institutional flows into Bitcoin as 2020 progresses. Obviously, you can buy Bitcoin using the Cash App as well. So you have the situation where PayPal, Square, Venmo, Robinhood, all these different ways to buy Bitcoin. And so I think you really have sort of the perfect storm here, where the Fed has to keep printing. They have to keep increasing their balance sheet. You have all these momentum traders. You have institutions underweight Bitcoin, and you have the possibility that Bitcoin actually does hit escape velocity and break away from the stock to flow model and begin to price in the 2024 and 2028 halvings. If you found this helpful, be sure to hit that subscribe and like button. Let me know your questions and comments or critiques in the comment section below. Thanks a lot for listening, and I'll see you in the next video.